Good morning, students. Hello, Namaskar. I am C. Ankit Sharma again with our income tax classes. I hope in last session, as we discussed about the topic salary, you must have gone through it. You must have tried again the example we discussed, and you need to revise it. As I always say, revise twice. That's my advice to make you wise. So I told you in the last class also that when I will take the next class, that means today. First of all, we will take a MCQ test or MCQ questions. So you might be able to understand that what kind of question can be framed in the examination. So before starting that, let us good morning, everyone. So there are good morning messages from Dayanesh Shingle, good morning. Anisha is good morning. Jyoti is good morning. Harshita, good morning. Everybody having a very good morning. Good morning, Sankaran. Murtaza Ali, good morning. Rohit, good morning. Kalonjia is good morning. Harshit, good morning. Abhishek is good morning, of course. So it's very good to see you again virtually. Technically, I can't see you, but you can see me. So let's start today's session with our MCQ test. After that MCQ test, we will start our topic, which is now leave encashment. Before this topic, we have concluded our basic salary concept, advanced salary, little bit about area of salary, then allowances portion. Then we were on to compensation. We have completed pensions provision. We have completed gratuity provision. And now we will move on to leave encashment provision. So I hope that you are actually understanding the concept of salary now. It's a very, very important topic in your examination as well as in your personal life also. Because these are the cases you might be encountered, like your parents, like your brothers, sisters, friends, etc. Those are getting salary. So now you are able to understand their salary better. Fine. So I'm starting a MCQ. You should read questions very, very carefully. In MCQ, it's very important that you should read the questions very carefully. So here is first MCQ, and I expect an answer from you. Please do one thing. Whenever you answer it, always write in your query session question number and then the option. Do not write the whole provision in answer. Just write question number and the correct option, whether it A, B, C, or D. Fine. So this is the first question. Which of the following is not treated as salary income? Which of the following is not treated? That is foregoing of salary, that is part-time salary, that is advance against salary, or it's advance salary. So you should answer quickly. Which of the following is correct answer? Fine. Okay. Before I completed that, answer has come actually with me. And Rohit is saying option C. Suman is saying option C. Jyoti is saying option C. Dhyanesh is saying option C. And Jasha is also saying C. Deepika is C. Okay. Khojma is saying A. Miss Sindhu is saying A. I have told you that foregoing of salary is kind of an application of income. In the last session, we discussed it. That is application of income. So that cannot be exempted in your hand. That is going to be treated as salary. So correct answer is C, not A. The correct answer is advance against salary because it is in the nature of loan. So Abhishek also replied, Abhishek, I just told that please write the question number and the correct option. Do not write the answer. You answered that advance against salary. So it's an MCQ. Kindly write the correct option. So question number 1, correct answer is C. I will upload it. I will upload the correct answer sheet also on the portal today. So I'm just telling you right now what is the correct option. The correct option is C. Question number 2. For an employee in receipt of hostel expenditure allowance for his 3 children, the maximum annual allowance exempt under section 1014 is. You remember the provision regarding the hostel expenditure? We have studied in last session. So you need to tell me if an employee have 3 children. So you need to tell me how much maximum allowance exemption he can claim in respect of his 3 children. I'm waiting for your answer. Just give me the correct answer quickly. Almost all of you give me the correct answer of question number 8. Few are exceptions, but almost all of you is giving me the correct answer. It's very good. It's really good to see that you all are here. You all are sincere for your profession, for your studies. Very good. Well done. Now, question number 2, correct answer. I am waiting. Saurav Shah is saying it's B. Anyone else? Quickly, I'll not give much time. Fine. That's why I said please revise twice. If you have actually learned the provision, if you remember the correct provision, that will be really easy for you to find the correct answer. Okay. Alok is saying D. Rohan is saying, of course, D. Sindhu is saying B. Somebody is saying B. C. Tanuja is saying 3600. Very bad, Tanuja. Okay. Jyotija is saying D. Very bad. Samir is saying 1. 1 is no option. It's A. Okay. If you want to say 1. Then Shruti is saying option B. The correct answer is option B. High five from the Wi-Fi. Those are giving the correct answer. Shruti, you are correct. Okay. Rohan is also correct. Jyoti is wrong. Vagela is correct answer. Harshita is giving option B correct. Why it's correct? Because we have learned that for hostel expenditure, there is an exemption of 300 rupees per month per child. Maximum for 2 children. Same like in case of education allowance. In case of education allowance, the exemption is 100 rupees per month per child, maximum for 2 children. And for hostel, it's 300 rupees. So a single child can claim 300 rupees, and then for a year it is 3600. And that is only for maximum 2 children. So 3600 plus 3600, that means maximum exemption can be claimed, that is 7200. Moving on to our next. Mr. A is employed in ABS Transport as cabin driver. He is paid 15,000 every month in the whole of previous year 22-23 as allowance for meeting his personal expenditure. Do not worry, I will upload the solution also. So I am not going to upload the option only. I will also upload a solution PDF so you can find out how that answer came. If we will discuss it over here, that will consume our time. And time is very important. We need to cover a lot of provision under salary head. Fine. So he is paid 15,000 every month in the whole of previous year 22-23 as allowances for meeting his personal expenditure. In the course in the running of goods vehicle, Mr. A does not receive any other allowance except this. The amount of allowance eligible for exemption is, you need to find out. So he is technically a transport employee. Understand? He is technically a transport employee. And I have taught you the provision regarding the transport allowance and the transport employee allowance in this case. So for the purpose of transport employee, the provision was 70% of allowance or 10,000 per month, whichever is lower. So you need to find out what is the exemption he is going to avail in this scenario. So what is the correct answer? In respect of question number 3, let's see who has given me the answer. Okay, Jay is saying a D option. Okay. Saurav is saying again D. It is not transport allowance that 3,200 rupees per month exempt for handicap. You are getting confused with that provision. This is the allowance for transport employee. And in the provision, we have seen that for transport employee, the provision is different. It's 10,000 per month or 70% of the allowance received. Whichever is lower is going to be exempted. You need to apply that provision, not the normal transport allowance provision. Understood? Please read the MCQs or every question very carefully. Fine? We cannot afford this. This is a simple question. You cannot afford it to solve wrong. So question number 3, still answer is coming. Somebody say B. Dhyanesh is saying B. Good, Dhyanesh. High five on the Wi-Fi. Zafir is saying B. Very good, Zafar. Saurav is saying C. Wrong. Deepika is saying C. Wrong. Priyanka is saying B. That is correct. Very good. Well done. So the correct answer of question number 3 is B. Because 10,000 per month or 70% lower will be exempted. Moving on to our next question, number 4. Children education allowance received by an employee from his employer is 80 rupees per month per child for 3 children. Taxable education allowance you need to find. It's a little tricky question. Again, it's simple also. You need to tell me the taxable portion, not exempted. I'm asking now the taxable portion of allowance. Okay. So let's see who is going to give me the correct answer first. I'm really happy to see that you all are actually participating in this MCQ. A lot of correct answer is coming or wrong answer is also coming, but it does not matter. The matter that you are technically trying this. So if you'll try, you will be success later or sooner. So question number 4, correct answer I am waiting. I need to know what is the taxable value. Okay. Question number 4, somebody say correct answer is A. Anish Oja is saying A. Okay. Kumar is saying C. Kanchan is saying B. Very good. A, B, C. D is left. Please somebody answer D also. So Dhyanish is saying A. Then Sudhanshu is saying C. Then Kabir is saying A and Sudesh is saying C. So the correct answer is A. It's not B, it's not C, it's not D. The correct answer is A. Why? As I told you, I'll upload the answer sheet also. But for time being, let me tell you in this question what is exactly happening. So he has 3 children. Children 1, children 2, children 3. He is getting this education allowance for each children 80 rupees per month. Okay. So we can exempt maximum for 2 children. We all know that the exemption is for maximum 2 children, and that is 100 rupees per month per child. We also solved children education allowance question in our last class also. And I told you that is for each children separately. You cannot combine this allowance. So for first children, we can exempt 80 rupees. Exemption is for 100, but we cannot give 100 rupees exemption because the answer cannot be negative. So maximum exemption can be up to the amount of allowance. So that is going to be taxable value is nil. Taxable value is nil for first children. Again, we can also claim exemption for second children. That is again maximum 80. So that is again nil. We cannot claim exemption for this child because maximum exemption can be claimed. That is for 2 children. So this is going to be taxable for whole year. And that will be 960 rupees taxable. I hope you clear why or how we derived it. That is a provision. We just find it. Right? Just a second. Okay. Moving on to our next question, and that is question number 5. We have solved till question number 4. Yeah, question number 5. Chandan, a handicapped employee. Numerical automatically try to tell you that what provision you should apply. Now, in this question, there is Chandan, a handicapped employee, received 1,500 rupees per month as transport allowance from his employer. His actual expenditure on transport is 1,000 per month. You need to tell me the taxable value of that allowance. So now you should apply the provision of that transport allowance we discussed earlier. So let's see who is going to give me the correct answer first. Very nice. Question number 4, correct answer is given by a lot of students. Ms. Harshita also giving the correct answer. Acharaj Gupta. Very different name. Acharaj. I'm really very Acharaj. Okay. Surprised. Correct answer has been given by Mr. Acharaj. Pratima is also gave the answer C of question number 4. That was wrong. Now I'm waiting for the correct answer of question number 5. So the correct answer of question number 5 is I need to know the taxable value. And somebody say option is D. Who's saying? Dhyanesh is saying. Acharaj is saying C. I am very Acharaj again. Jyoti is saying B. Sudhanshu is saying B. Kabir is saying B. So what are the provision? The provision is 3,200 rupees per month is exempted. Clear? So we are getting 1,000 rupees per month. So we cannot claim exemption of 3,200 rupees per month. Maximum exemption we can claim 1,000. So there will be no taxability. The correct answer is B. The correct answer is B. That is nil. Murtaza Ali also said B. Very good, Murtaza. High five from Wi-Fi. Very nice. Okay, so those have given the correct answer is very good. Those are not giving the correct answer is still very good. Those are sleeping right now. That is bad. Those are not attempting. That is very bad. Okay. So question number 6. Kishore retires on 4th January 23 after 16 year and 11 months job, of course, from A Limited. He received gratuity of rupees 6 lakh on retirement. Basic salary is 44,000. DA is 8,000. These are per month, of course. Basic is 44,000 per month and DA is also 8,000 rupees per month. Okay, do not get confused. It's also per month provision. Compute taxable gratuity if he is covered by Gratuity Act 1972, of course. So I've told you in gratuity, there are three kind of exemption can be claimed. As per case A, when you are in government, etc. employee. In that case, whole amount is exempted. Case B, when your organization, your employer is covered by payment of gratuity act. And C, when question is silent or you are not covered by payment of gratuity act. So this is the case number B. So technically I learned them like this, A, B or C. So this is case B. You need to solve it as per the provision of case number B. I hope you must have a calculator. Whenever I'm starting an MCQ or any faculty is starting an MCQ and there's a numerical topic, you should have a paper, pen, and a calculator. That's the basic things we need to solve on numerical. So you should see the provision, or if you have remembered already, that's very good. Apply these amounts and find out the taxable gratuity. And please let me know as soon as possible. I'm waiting for your answers. Josh is asking me regarding the question number 5. Josh is saying, sir, I have a doubt. Isn't that allowance for 3,200 rupees only for commuting between place of residence and place of duty? Transport allowance means that is an allowance for commuting from place of office till residence, vice versa. So if in question it is given, that is transport allowance, then it means it is for that purpose only. And it is exempted up to 3,200 rupees per month for a handicapped person. I hope it's clear. So question number 6 answer have been given by some students. Wow, it's so fast. In the taxable gratuity, somebody is saying C. Mr. Rohit is saying C. Again, Sandeep is saying C. Sandeep again said a different answer, and that is D. Again, this Saurav is saying C. I am asking not the exempted amount. Please understand, I am asking the taxable gratuity. You should read the question. Those are giving me the answer is C. I think they are giving me the exempted amount of gratuity, and I am asking the taxable. How we find taxable in income tax? That's a very simple way. That is received minus exempted. So if you are finding the answer is C, so might be you are wrong because you are technically giving me the answer of exempted gratuity, and I am asking the taxable gratuity. Please revise your answer. Mohammed is saying A. No. Danish is C. Sindhu is saying D. Very good. Shamshir Pulil Koravan Third Hodi. Very difficult name. Sorry if I pronounce this wrong. C. Rohan is saying D. Jyoti is saying A. Priyanka is saying C. Tanuja is saying 510. Abhishek is saying A. Jyoti is now saying is D. So those have given me the answer of C. Now they are converting their answer into D. Very well done. So the correct answer is D. 5,10,000 must be the exempted gratuity, and received minus exempted, that means 90,000 will be your taxable gratuity. Okay. Question number 7. Kishore worked in A Limited, retired on 21st October 2022, received gratuity of 1,20,000. He served for the company for 26 years and 7 months. His salary was 5,000 per month. However, the average salary for 10 months, that is average monthly salary, is given in question. Okay. That is 4,800 rupees per month. Not covered by gratuity at 1972. Find out taxable gratuity. Now, I call this case number C. So, need to solve it as per the provision of case number C. The formula was 1/2 into average monthly salary into completed year of service. So solve it and give me the taxable gratuity. I'm waiting. Let's see the correct answer of question number 7. Somebody has given me or not? Very well done, guys. You are doing a great job. Great job. Mayama is saying, how are you, sir? Madam, class has been started. I am very well. I hope you should also well and start doing the MCQ test. So question number 7, somebody is giving me answer A. That is Jyoti is saying A. Sindhu is saying A. Very well done, girls. Deepika Sahu is saying, can please solve the question number 6. I will send the solution. Do not worry. I have told you. I'm giving the correct answer of option of solution. I'll send the full solution notes on portal today. You can download it later. Fine. So you will find out how the numerical has been solved by me. So question number 7, Mr. Anil is saying A. Very well done. Vishaka Shetty is saying 57,600. That is option A, of course. Kanchan is saying C. Very bad. Kabir is saying A. Very well done. Jewel is saying A. So the correct answer is A. The correct answer is taxable gratuity is 57,600. Again, I am telling you, I will upload the full solution of each and every question on portal also with the correct option. Fine. So just relax. I'll solve everything for you. Next is for pension provision. A retired from service on 1st November 22. After serving for 18 years and 9 months, on retirement, he received a sum of 6 lakh as gratuity. This question does not need to do anything with the solution of gratuity. We need to find out the taxable pension. Why gratuity is given? Because I just need to tell you that he also received gratuity, because pension exemption depends upon the amount of gratuity received or not. So if gratuity has been received, it will be 1/3. If not received, then it will be 1/2. So in this question, the exemption will be found out as per 1/3 provision. He was entitled to a pension of 12,500 rupees per month with effect from 1st November 22, from 1st January 23. He got 60% of his pension commuted and received a sum of 7,50,000 as commuted pension. Calculate his pension taxable. Fine, it's a long question. It will take time. So this is I'm going to you as a homework. You can try it later. It will consume a lot of time. Fine. And again, that is question number 9 also. You should try it as your homework. So I'm leaving this because it's a HRA provision, house rent allowance. So question 8 and 9, you need to solve it at home, and we will discuss it in our next class if there is any issue. I'll upload the solution also. Just wait. So moving on to our normal provision. Before starting the class, of course, you should remember the guidelines. As in our earlier lecture also, I just asked you to please follow these guidelines. This will really help you and me also. I'll feel really good if you're going to follow these guidelines. After the guidelines, I always told you that I always used to share a quote for your motivation or for more interaction or just to make the class interesting. So this is today's quote, and let me tell you, this is one of my favorite quote. It is a quote I have read somewhere when I was doing C. It's very, very interesting. I just read that quote and it just actually engraved in me. I always think about this quote. Always. And it says there is no future in any job. There is no future in whether you are a doctor, whether you are a CA, whether you are a CS, whether you are an advocate, etc. There is no future in any job technically. But the future lies in the man or woman, or of course, it's a person. The future lies in the person who holds the job. How you exploit the job, that will depend whether you are going to success in your life or not. So it's not the job which actually helps you in your success, etc. But the person who technically holds the job, how the way you need to exploit it, that really matters. Like there's a doctor who is earning 50,000 per month. I know that doctor. You might also know these kind of doctors. And there is also a doctor who might be earning 50,000 per day. There might be a doctor who is earning 50,000 per hour. They all have the same degree of MBBS. But the thing is, they utilized it. They exploit it in a different manners. There are CA who are earning might be 50,000 per month. And there are CA who are earning 50,000 per day. And there might be a CA. Those are earning 5 lakh rupees per day. So the profession, the degree helps you to achieve that target, to complete that education. But how you exploit it, how you use it, how you expert yourself in that profession, that really matters. That will make sure where you will be in your future. In the same way, we all have 24 hours common in our life, like Mr. Anil Ambani and me and you. We all share one thing in common. That is, in a day, we all have 24 hours. But the way he utilized that 24 hours, the way I utilize the 24 hours, the way you utilize your 24 hours, that makes our future different. Like you all are students, you all have 24 hours to study, but still you will not going to get the equal marks. Not all of you going to have the equal marks. Why? Because someone of you will exploit these 24 hours for their education, for their studies. Maximum part they will use for their studies. And might be some other student. Those are not giving their that time in the studies. So the future is not in job. The future is in you. So you are technically the future. It depends how you utilize your 24 hours for your studies, for your future, for your family, for your profession, etc. And that will decide what benefit you can take from your 24 hours in your future. I hope it will help you to understand new things in life. Now moving on to our provisions. And now we are on leave encashment provision. That is again a kind of a compensation. As we discussed about the pension, that was a kind of a compensation. We discussed about the gratuity, that is a kind of a compensation. Now this is a compensation that is called leave encashment. As the name suggests, that is, you have some leave in your account. And now you are going to encash them. You are going to take money in response to those leave. Why it happens? Because in generally big organization or a good organization, there are some leaves which your organization provides you. There might be a medical leave or casual leave every month. For example, Mr. A, we can understand it like this, that Mr. A is working in a XYZ Limited. And the employer says, I will give you 2 days casual leave every month. So that means if Mr. A takes 2 days holiday, except Sunday, if he takes 2 days holiday out of his working days, then still he will get the salary of full month. Because there is 2 days casual leave. That means paid leave. You can take holiday for 2 days and even your salary will not be deducted. If you take the leave of 3 days, then 1 month salary will be reduced. 1 day salary will be reduced. So that is called casual leave. Now what happened? In month first, he did not take any holiday. Then what will happen? He will get 2 days extra salary. If he has taken 1 day's leave out of his 2 days casual leave, then he will get 1 day extra salary. If he has taken 2 days leave, then he will only get per month salary. There will be no extra salary. Fine. So technically, whatever leaves he has been assigned by an organization to their employee. So if they did not avail it, then they can get this amount not every month. For example, I am saying you that he will get 2 days extra payment, etc. But technically, these kinds of leaves has been accumulated. 2 days in this month, might be next month, 1 day, etc., etc. So whenever he is in a job, at the time of retirement, whatever these kinds of leave has been accumulated in his account. For example, he has worked for 20 years and he has 300 days leave, like casual leave, which he has not been utilized. He has total 500 days leave, out of which he used 200 days leave. So now he is left with 300 days leave, which he has not been utilized. So at the time of retirement, he will get salary equivalent to 300 days leave. And that is technically called leave encashment. So in a simple way, we can say that if you are getting any payment at the time of retirement against the leave you does not utilize, understand, you will not get the payment for the leave you utilize because you already utilized it. It will be that payment for those leave, those you do not have utilized. So that is called leave encashment. If he is getting this leave encashment payment during service, then what will happen? All compensation, anyone, if received during service, that is going to be taxable. So exemption will be available only if he or she is receiving this leave encashment after service. So it will be given in question that how many days leave has been provided. That means 500 in this question. How many leave has been unutilized? That is 300. And how many leave has been utilized? So if I have given two things, I have been given how many leaves has been allowed or utilized, then I can find out unutilized. And if it has been given in question that how many has been provided and how many has been unutilized, then of course I can find out the utilized portion also, like this. Leave encashment slightly confusing, but it's not difficult. Examiner will give you either two details or three. Like they will give you how many leaves have been provided. For example, 600. We need to find out three things. How many leaves have been provided? How many leaves has been utilized? Utilized mean leave has been taken. And third is leaves unutilized. Can anyone tell me that leave encashment will be received for which? Utilized leave or unutilized? I'm waiting for your answer. Can anyone tell me that leave encashment will be paid off for which kind of leave? Leaves we have utilized or leaves we did not utilize? I'm waiting for your answer. Give me the answer fast. I need to know that leave encashment payment will be paid by the employer for which leaves? Those has been utilized by the employee or those has not been utilized by the employee. Correct. Very nice. Those are unutilized. A lot of students has been given me the correct answer. Very well done. So of course, it will always be paid for unutilized leave. If in question it says that you got the leave encashment 3 lakh rupees for 400 days leave, 3 lakh rupees for 400 days leave, then automatically you should understand that these 400 is unutilized. And now if I'll ask you, find out the leave utilized, then how much it will be? Of course, 200. It's simple mathematics. And what if the question has been given, total leave was 600, utilized was 200, and you are receiving 3 lakh rupees for other. So what is the other? Other means that is unutilized and that is 400. So two information will be given in question. First is leave provided will always be given. Either you will be having unutilized leave, so you can find out the leaves utilized, or they will provide you the utilized leave, so you can find out the unutilized leave. It's very simple, proper basic maths. Okay. Now, how the exemption will be claimed? That is interesting. For the purpose of leave encashment, again, if it has been received during service, we all know what will happen. It is going to be taxable for all employee, whether you are a government employee or other, does not matter. Now, if it is received after service, then if you are a government employee, it's going to be 100% exempted. That's why people want to do government job, because you are getting salary for less work, or you are actually getting all the compensation, and technically all of them are exempted. Other than government, there are 4 limit. You need to find out 4 amount. And the lowest of them is going to be, of course, exempted. As always, in all compensation, we need to find out the minimum amount of exemption with the help of a formula, etc. Moving on to that formula. So that is leave encashment calculation. Generally see type of at the time of retirement, at resignation, while in service, or at death. Generally, employees are allowed to take leave during the period of service. I have explained to you what is the meaning of leave encashment, that casual leave, etc. If you are receiving it during service, it's going to be taxable, always taxable. You can read this theoretical provision. It's simple. Now, exemption is this: the amount received for the leave remaining or during or end of the service will be termed as leave encashment. But leave encashment during the service will be fully taxable. We all know that. Exemption will be for lump sum payment of leave after job. Fully exempted in case of government employee. In case of other employee, minimum of following will be exempted. It's very important. For the purpose of examination, compensation is very important. If there is a salary question is going to be framed for your examination, etc. So compensation will definitely going to be the part of this. And it might be pension, gratuity, leave encashment, retrenchment, DRS, etc. They all are important. You cannot leave any one of them. So first condition is amount received, of course. 3 lakh rupees is the fixed limit for leave encashment purpose. Third point is 10 into average monthly salary. Average monthly salary, we all know it's going to include basic salary, then DA as per terms of employment, and again percentage commission on sale. And this is average of 10 months. The fourth point is very interesting and it's quite different also. It says leave earned in days, leave availed in days into average monthly salary upon 30. Why we are doing this upon 30? Because this information in days. So we need to multiply it with the days. So we have the average monthly salary that is in monthly form. So divide by 10 will convert into a per day salary. So that's why, because this information in days, we need to find monthly salary also in days. So this has been solved. It's simple. Now leave earned in days. Leave earned means leave provided by your employer. If your employer provide you 40 days leave, not in a month. If you are having 40 days of leave, what will you do in a month? Of course. So 40 days leave in a year. In the examination, leave might be provided in a yearly basis. So if question says that your employer provide you 40 days leave per annum, so that is going to be written over here in the whole life job timing. So you are giving 40 days leave per annum and you work for 15 years. So technically we receive 40 days per annum and for 15 years. Technically leave on is 600 days. But there is a new thing in over here. You need to understand this. There is a new thing. Leave earn, government has made a restriction. That might be some employer is going to give you 100 days leave per annum. So that is a very huge number of days of leave. So government has made a restriction, that is leave earn will be like this. Actual leave provided in a year or 30 days per annum, whichever is lower. So employer can provide you a leave for 40 days per annum or 50 or 60 or whatever it is. But income tax made a restriction that for point number 4, leave earned in days, you need to find it like this. That is actual leave per annum, 40, and there's a maximum limit made by government that is 30 days per annum. So we will take whichever is lower. So it cannot exceed 30. If your employer is providing 25 days leave per annum, then it will be 25 or 30. So 25 will be over here. And this is for 1 year. So for 15 years, this figure now will be this. So leave earn has a special provision. And what is this special? That it should be find it like this. That is actual or maximum is 30. Whichever is lower. So in our example, we cannot take its 15 into 40, 600 over here. First of all, we need to check it out with the X limit provided by the government. And that is 40 or 30, whichever is lower. And that is 30. For 15 years, it will be now 450. Now there will be leave availed, and that is going to be given in question. So whatever leave availed has been given in question, you can write it over here. So after that, AMS upon 30. So you will get a amount in point number 4 like this. Understand? We need to find the leave earn with the help of this formula, that is actual or 30, whichever is lower, multiplied by the number of year of service. Of course, that is complete year of service. And then you need to be given the in question, that is leave availed. How many leaves you utilize? That will be given in question. So you need to find out the leave utilized. You need to deduct it from the leave earn and then multiply it with the average monthly salary upon 30. It has been written over here also. You can read it out with the notes. Leave earn will be, note number 1 is very, very important. Leave earn will be maximum 30 days for a completed year of service. Fraction will be ignored. And salary is as per gratuity C case. So I just told you that AMS means the same meaning as we have discussed in the gratuity case. Average monthly salary means average of salary drawn by employee for 10 months immediately preceding the date of retirement. Again, note number 3 and 4 is same as we discussed in gratuity case. In gratuity case, there was 2 general note. It says that 20 lakh rupees limit will jointly remain 20 lakh. And if someone have received gratuity exemption earlier, then that exemption amount will be deducted from the exemption of 20 lakh rupees in the next year when he or she will be receiving gratuity again. Same copy paste provision for leave encashment also. Here is the limit is 3 lakh rupees fixed. What we have limit is 3 lakh fixed. So again, note number 3 is saying the same thing. If an individual getting leave encashment from 2 employer at same time, then separate calculation will be made, but the limit of rupees 3 lakh will be jointly remain 3 lakh. If an employee received leave salary in earlier years, then the limit of 3 lakh will be reduced by the amount exempted in earlier year. Here are 2 examples for you to calculate the leave encashment exemption. That is your working for as a homework. You can try them and we will solve it in our next session again. So that was leave encashment. The next provision is provident fund. So now I'm going to take the queries. As we all know that I'll take queries after 30-40 minutes. So that will continue up our flow of study. Let's see if somebody is going to ask me something. Okay. Shruti is asking, sir, what is lump sum? Lump sum mean commuted payment, like in a lump sum amount, not monthly, which is not monthly, which is a commuted value, which is a whole value. That's called lump sum value. Fine. 450 leaves. Okay. Miss Jyoti is saying, sir, please use some Hindi. I can use Hindi, but I guess the majority of you are from, I guess, English medium, I hope. And I guess that will be really easy for all of us to understand in English. So if you have any query, I'll solve it in Hindi, Jyoti, as I've already told you. But the flow of our notes, the flow of our study should be in English only. Fine. And we are actually discussing the numerical topic. So it does not matter much. You should know the meaning of the topic, like leave encashment. What is the meaning of leave encashment? You can read it from anywhere from your Hindi book, etc. But the provision will be, of course, in English. You need to calculate the amount in English only, like leave encashment, AMS, etc. So all clear, sir? Okay, Danish English. So we are moving on to our new topic, and that is provident funds. Now, what is provident funds? Provident funds kind of a contribution which we made every month for our future planning. Like we have pocket money. For example, if we need to celebrate our birthday and we know it will come after 7 or 8 months and I need to give a party and I know that is going to be at least 10,000 rupees I need for it. And my pocket money is only 1,500 rupees per month. So what I can do, I can separate a certain amount out of my pocket money and I'll save it for my future birthday. So it's a kind of a saving, and which will give me benefit when the huge amount I need for myself. That is a kind of a concept in provident fund. What happens whenever you are in a job, you are getting per month salary. Okay, you are getting per month salary for your house maintenance, etc. But after retirement, what will happen? That regular income of your salary, you are not going to have that regular income. Fine. So now how things will work? Of course, generally what will happen that people will save it. If I am getting a salary of 50,000 per month, I need to save it for my future because I already know that a time I will going to be retired. And for that time period, I need some amount of money, in a huge amount of money technically. So what I'll do, everybody will do 50,000 if I'm getting per month, might be I'm going to save 10,000, 5,000, 6,000, whatever it is. And that 5, 6,000 will be a huge amount, accumulated amount, what I will get when I am going to be retired. So this is general thing, what everyone does. But government thing, what if somebody is not going to do that? What if somebody is expending whole his salary? Then what will happen? There will be a crisis. There will be a problem. There will be an issue when he will retire because he expend all of his salary during his job. So what he or she will do after the time of retirement? So government say, whether you are doing this saving work or not, but we will do for your behalf. So government say that we will cut down a certain amount of, like if there is Mr. Superman getting salary of 50,000 per month from his employer. So he is saving or not, it does not matter. Government say the provision of provident fund with this intention. I'm just telling you the intention of this provident fund. Then we will move on to the topic, the numerical provision, the numerical applicability, etc. Fine. So you will understand first of all that what we are studying. If I directly move on to the provision that this is going to be taxable, like in case of leave encashment, if I'm not going to tell you what is the leave encashment, I am directly jumping on to the provision that you need to find out the exemption like this. So you might be able to find out the solution. You might be able to solve the question, but that is not the correct way. First of all, you should know what exactly the thing is. Like what is gratuity? It's for gratefulness. What is leave encashment? It is for leave accumulated at our account. So we are going to repay for it when at the time of retirement. In the same way, I'm just telling you the provident fund concept. So once you get the concept of anything, then the numerical treatment or any kind of treatment that will really make you comfortable to understand that treatment also, because you can connect it that exactly what we are studying. Right? This is the way I technically try to make things clear to my students. So what government say that out of this amount, a certain percentage, for example, 10%, we will deduct from employee salary. That is called employee contribution. And you have to do it. You do not have any choices. Fine. So this 5,000, government will say we will deduct from your salary and will deposit in your provident fund account. So we are not taking it. We are technically depositing in it your provident fund account. Like a bank, we are taking this amount and we are depositing it into your bank account. So the income is still yours, but we are just saving for yourself. So this 5,000 will come to your provident fund account. Clear? So technically you will get only 45,000 rupees as a salary. You will receive this much salary. So 5,000 will be in your other pocket, we can say. So in your one pocket is coming 45,000 and in the other pocket you will get 5,000. But in this case, if I'll ask you how much basic salary is going to be taxable in his hand for this previous year, will it be 50,000 or 45? So the provision was due or received. We have discussed it, whichever is earlier or higher. So due is still 50,000. Either receive 45 or 5, does not matter. Basic salary, we need to show 50,000. So it's technically your income. Whatever is just happening, that your employer is not giving you 5,000 right now. He is depositing this amount in your some other account, but technically it's your income. So for basic salary, we will taxable 50,000. Do not get confused. We will not taxable 45,000 because it's still your income, but just in your other pocket. So it will be 5,000 per month. in your this account, and for a year it will become into 12. That means 60,000 is saving on your behalf in your other pocket for a year. If you are working for 30 years, so it will be around 18 lakh rupees. Clear? For 10 years, it will be 6 lakh. And for 30 years, in your this account, that is amount will be almost 18 lakh rupees. What you will get at the time of retirement. So that's a good amount. But just wait. It's not the end of the story. This is the contribution of employee. And now the actual provision is here. And now you will feel good. Government say whatever contribution has been done by employee, the same at least must be done by the employer also. So if out of your salary 5,000 has been deposited, then again the employer also need to deposit 5,000 at least. So let's discuss minimum 5. I am going to deposit 6,000. So the figure should not be same. So you will not get confused. So employer is also depositing 6,000. Percentage might be different. I'm noting the amount. So employer is depositing 6,000 in your account again. This is the mandatory provision, right? So as your salary is going to be deducted, that is a mandatory provision. This is also a mandatory provision that if provident fund provision is applicable on your organization, then a certain amount will be deducted from your salary, and a certain amount, the amount have been contributed by employee. At least that amount has been contributed by employer or more than that. So in this example, we are taking that employer is paying 6,000 for you. So this is your extra payment of salary. So you are technically not getting only 50. 50,000 is over here, 45 in your hands, 5,000 in your other pocket, and 6,000 in your other pocket also. So technically you are earning 56,000 per month. Understand? So employer is not paying 50. He's paying 50 plus 6,000. This is the benefit. That's why we create provident fund. So now 6,000 per month again in employee account. For 12 months, it will be around 72,000. For 10 years, it will be 7,20,000. And we are moving on for 30 years. For 30 years, it will be 21,60,000. So now at the time of retirement, technically you are getting both of this, 21 and 18, around approximate 40 lakh. It's a good amount, but the story does not end. Because on this amount, you will also get interest every month, and that is accumulated interest. So you are not only getting 18 plus 2160, you are technically getting a huge amount of interest also. That is compounding interest. So for example, we can say you are getting almost 15 lakh as an interest also. Just suppose that amount. So technically you are getting 55 lakh at the time of retirement. This is not the end still. We just assume that the salary and contribution will be constant. We are technically calculating these amount on assuming that your salary is just 50,000 per month for next 30 years. That will not happen. Your salary will increase also. It will be 50, then 60, then 1 lakh, etc. So as soon as the salary will increase, this contribution will also increase. And this contribution increase, that means this contribution increase, and this means interest again increase. So that is going to be a huge amount. Almost 1 CR, I guess, approximate. If you have a salary of 50,000 per month, starting off your job, and after 30 years almost, so you might be able to get at least 1 crore rupees. So now you got what is exactly Provident Fund does. So under Provident Provision, we need to study, we will study technically, once the treatment of employee contribution, we need to find out what will be the treatment under that salary of employee contribution of 5,000 rupees. Will 5,000 be treated as his income? No, because this 5,000 is a part of 50,000 and 50,000 has been included under already basic salary. So its employee contribution does not have any treatment in salary head separately because it is already a part of your basic salary. We will discuss it one by one in the detailed provision from the notes. But for timing, I'm just telling you what I'm going to teach you. in regarding this. The second provision is what will be the treatment of this 6,000 which has been paid by your employer. So there is a treatment because it's an extra income upon 50,000. This is 6,000 is going to be taxable with some specific provision. So we need to find out the provision of employer contribution. What's the treatment of employer contribution? We will discuss it. Then there is a treatment of interest. That is also my extra income. So how interest is going to be taxable, both of our employee contribution and employer. That is going to be discussed. And the last thing is what is going to be the treatment of this compensation when we will receive it at the time of retirement. So when I'll start the process of provident fund provision, then there will be a treatment of employee contribution. So you should understand what we were talking about. What is employee contribution? That's why I just try to explain you the whole process. So you understand now the numerical treatment. If I'm saying employee contribution, you should understand, okay, that's why the employee contribution came. Then again, employer contribution. Then again, interest provision, and then the compensation, or we can say repayment provision. So moving on to our notes. It's a very interesting treatment. If you are feeling that it is difficult, then understand this is very, very, very important. And there is nothing difficult if you have interest in it. I have told you in last class that if you have interest, there is nothing is difficult. Let me tell you a very simple, very short story. And this is the story I always tell in my every batch. And it's a real story. It's not a story we can say. It's a thing which can change someone's life, which can change actually your vision regarding your profession, about your study or something else. Like it's a real thing. Once Albert Einstein has been asked, Albert Einstein, we all know the greatest scientist of all time, Mr. Einstein. So his accountant asked him, actually, so what's the most difficult thing in this world for you? Because he was so intelligent, Einstein, he can solve each and everything. So he said, in my opinion, income tax is the most difficult thing in this world. This is the real thing. Right? This is the real what I'm saying here. And her wife was also there. There are three people like Mr. Einstein, accountant, and wife. So accountant asked, and Einstein said that the most difficult thing in this world to understand income tax. Now, just imagine we are studying income tax and we are understanding it. I am teaching it. So Einstein was not able to do that. So am I more intelligent than Einstein? What do you think? Or even you are able to understand the provision right now, like residential provision, rate of tax. He was not able to. So is it so that you all are more intelligent or superior than Albert Einstein? And me also? No, do not think about it. Never. It's not possible because he is the great scientist. Then how it's happening that he was feeling that income tax was the most difficult subject and we are able to understand it. Because, and what happened? This conversation was happening and Einstein said this, that the most difficult thing, and his wife said, no, it might be because you do not have interest in that. You have interest in inventions, in science, in these kind of things. So you do not have interest in income tax. That's why you are finding it difficult. And now imagine how accurate it was. Yes, we find each thing difficult if we do not have interest in it. I also explained it in a different manner in our last session also. That if we have interest in something, we have interest in dancing, it will be easy for you. If you have interest in any sports, it will be easy for you. But if you do not have interest in something, that's impossible for you to understand that. And even Einstein just proved it for you. So what will happen if you need to complete this CA course? You should have interest in this course. You should have interest in this profession. दो ही तरह के लोग CA करते हैं. दो ही तरह के. Two kinds of person. Right? For one who actually want to be a CA. That's their passion. They just wanted to prefix that CA word in their name. And the second one, who do not have any choices. They have some financial crisis. They need to do something which can support their family or themselves. So please understand that. Don't take this profession lightly. If you really want to do this, if you have interest in that, if you have passion for it, just follow it. And you all can be CA. You must have listened that result is 10%, 20%. So those 20% are the only one who actually wants to do a CA. There might be others who actually just doing it for no reason. So you follow your dreams and you should have interest, because you should understand this is the only profession. This is the only thing you have. You can fulfill every dream of your life if you able to complete this profession. So you should create interest. Interest will directly attach with the reward. So if you are losing your interest, if you're feeling it's difficult, if you're feeling it's hard, just think about whatever goal you want in your life. If you want money, you want traveling, you want good clothes, you want car, etc., whatever you want, respect. You need to respect in your life. Then you should know that this is the only way you can do it. So with you and your dreams, there is only one thing in between, and these are the books. And this is very easy. Books can be boring, but it's not difficult, because there are a lot of students who cannot afford even doing this, what you have privilege you have. So you should value that privilege, whatever you have. You should understand that without interest, it's very difficult. It's going to be difficult. And how you can create your interest, to understand that this is the only thing which can make your dream fulfilled. So if you want your dream need to be fulfilled, you have to create interest, and that will create your interest automatically. And if you have interest in something, that thing cannot be difficult for anyone in their life. We all are humans. We technically use 2 to 10% of our brain, only 2 to 10% of our brain. And in that 2 to 10%, somebody has invent rocket and go to the space, etc. And somebody became the terrorist. We all have that kind of brain. So it depends how you exploit your brain. So if you can create a rocket and you can go to the moon with this 2 or 10%, how difficult the study is. It's just we are not actually that much focus with what we should be. So let's moving on further regarding the Provident Fund. So I explained you the Provident Fund. Here are the 4 things which need to be explained. Employees' contribution, I have explained you. Interest on employee contribution, employer contribution, and interest on employer's contribution. So these are theoretical. You can go through it. Types of Provident Fund. Again, that's a theoretical topic. We have a lot of Provident Fund. And we have different kind of treatment also regarding those. So there's a recognized Provident Fund, unrecognized, statutory Provident Fund, public Provident Fund. We need to discuss this. You need to read it. They are the concept. Those are technically going to tell you what the difference between these Provident Fund. But for the purpose of numerical treatment, we need to understand what is the numerical treatment. And here is the format or diagram or table which will explain you the treatment. So remember, we need to understand the treatment of employee contribution, which does not have any treatment in any Provident Fund under the head salary. Fine. Because your employee contribution automatically becomes the part of your basic salary initially. Then second is employer's contribution, then interest on both contribution and the repayment. So I have divided these all provision in 4 categories. We have 4 funds. In examination, you should see what kind of fund provision has been asked. One is URPF, that is unrecognized provident fund. Then it's RPF, recognized provident fund. SPF is statutory provident fund, and PPF is public provident fund. So you should check clearly that contribution is being made into URPF, RPF, SPF, PPF. It is going to be given in your question. You just need to check it out, and then the respective provision will be applicable. So first of all, first is very simple. That is employee contribution. So employee contribution does not have any treatment, under the head salary, because it's also automatically the part of your basic salary. So it cannot be taxed twice. But there is a treatment under deduction provision. Deductions are topic you will be discussed later. We will discuss it later. It's section 80C till section 80U. From GTI, out of your gross total income, you are able to claim a deduction. So Whatever is your employee contribution, government will provide you a deduction under section 80C. If it is a RPF, if it is a SPF, and if it is via PPF. There is no deduction in case of URPF because its name is unrecognized. Its name suggests that I am unrecognized. I do not have any recognition. So if you do not have any recognition, government will not allow the deduction. So the first point you will be able to understand when you will going to study the deduction chapter. Second is employer contribution. So if there is an employer contribution, that is a 6,000 amount, what we were talking. Employee contribution in our example was 5,000 amount, what we discussed. And this is now about the 6,000. What is the treatment of that 6,000? So under URPF, there is no treatment. But this is saying now employer's contribution. Up to 12% of salary is exempt and excess will be taxable. For example, your salary is 50,000 per month. It says up to 12% of salary, it is exempted and balance is going to be taxable. So your salary is 50,000. You need to find out the 12% of it. That will be 6,000. So if employer contribute up to 6,000, then there will be no taxability. It's a good news. Very good news. It's exempted. But if employer paid more than 6,000, then that excess amount will be taxable. For example, his salary was 50,000. Employer paid 7,000 per month. So now 50,000, 12% is 6,000. An employer is paying 7,000. So excess 1,000 per month is going to be taxable. It's as simple as that. So I'm not writing it because it's some mathematics. You all are that intelligent, but that you can understand what I'm saying, right? If it is a SPF, then it's fully exempted. That means no treatment. If it's a PPF, that is not applicable. Again, no treatment. Now, what will be the treatment of interest on employee contribution and employer contribution? Again, under URPF, there is no treatment. Under RPF, whether it's an employee contribution or it's an employer contribution, in both cases, the treatment is same. And it's a now exempt up to 9.5% per annum and excess is taxable under salary. So your contribution is exempted up to 12% of salary and balance is taxable. And interest is exempted up to 9.5% per annum and it is not on salary. Remember, 12% on salary, but there is no 9.5%. We are not going to calculate it on salary. It's a rate of interest. If rate of interest is 10%, it will be given in question. Then up to 9.5% exempt and 0.5% is taxable. If rate of interest is given on PF is 8%, then full exempt because up to 9.5% nothing is taxable. If in question rate of interest of provident fund is given 12%, then 9.5% exempt and 2.5% is taxable. As I told you earlier also, that numerical provision can be understood well when what we do the numerical treatment of an example or illustration, etc. So you just read the provision, we will do the example, and then you will understand how it need to be calculated. Again, very good news, exempted, no treatment. So treatment is maximum in case of only RPF. You can see no treatment in URPF right now. You can see no treatment in SPF and PPF also. The treatment is only in RPF. So what is the most important for salary chapter? The RPF treatment. Now the repayment comes. You have seen that under URPF, there is no treatment of employer contribution, employee contribution, and interest. The whole treatment, the whole taxability is on the repayment time. So on repayment, employee contribution, interest, only employee contribution interest. Whatever interest is received on employee contribution part, that is going to be taxable under income from other source. When taxable? At a time of repayment from URPF. So if in case of URPF, you are getting interest at the time of repayment of rupees 1 lakh on employee contribution. So that 1 lakh is not going to be taxable under the head salary. That's going to be taxable under the head of income from other source. Clear? and employer contribution. In case of employer, contribution and interest both is going to be taxable, because contribution was not taxable at the time of contribution and even interest was not taxable. So both will now be taxable at the time of repayment under the head of salary. Let me show you how. If in question it says that at the time of repayment, employee receive employee contribution 10 lakh, interest on that 1 lakh. Employer contribution repayment was 12 lakh, interest on that was 1.2 lakh. An examiner asks you calculate the taxable amount. So this is not going to be taxable anywhere because that's an employee contribution. This interest is going to be taxable under income from other source, and this 12 plus 1.2, that means 13.2 lakh. It's going to be taxable under the head salary. Understood? So employer contribution as well as the interest will be taxable under the head salary. In case of employee contribution, only interest is going to be taxable. Under RPF exempted, under SPF exempted, under PPF exempted. So treatment in only two cases. Technically in URPF, only repayment is taxable. Under RPF, under RPF, contribution of employer and interest on employee and employee contribution is taxable treatment. Interest credited on contribution by such person, there is an amendment as came from 1st April 2001. And then amendment says regarding these exemption, certain condition. This is regarding the certain condition. Earlier, the whole amount of contribution and interest was exempted. But government made a slightly different provision, a simple amendment. It's very simple. And it says, as per section 1011, any payment from a provident fund to which Provident Fund Act 1925 or PPF would be exempt. We all know that. Accumulate balances due and becoming payable to an employee participating in a RPF also exempt. We just discussed it. However, the exemption section 1011-12 would not be available. This is the new provision, what we are discussing. Would not be available in respect of income by way of interest. So this is only regarding the interest portion exemption. It says whatever interest is received by under section 1011 and 1012 during the previous year to the extent it relates to the amount or the aggregate of amounts of contribution made by that person, employee exceeding 2,50,000 in any previous. So if you contribute more than 2,50,000, if you contribute more than 2,50,000, it says for this, that if employee's contribution is more than 2,50,000, then the proportionate interest on that exceeding amount. For example, I have contributed 3 lakh rupees. So till 250 lakh interest accrued exempted, but that 50,000 rupees interest is going to be taxable from 1st April 2021. We have a short example of this also. So do not worry. It will be more clear when we will discuss this with the practical example. And now it's say if there is no employer contribution, it's just an employee contribution and employer contribution is not there, then this limit of 250 will be double. Then up to 5 lakh rupees interest is exempted and interest exceeding 5 lakh rupees is going to be taxable. So this is applicable only on those contributions which has been made after or on 1st April 2021. So if there is any interest which is due on a contribution that is up to 31st March 21, this provision will not be applicable. So you should read it once or twice, and when the example will be there, then we will be able to discuss it more clearly. Right? Now this is the provision. What happens if you are a part of RPF, Recognized Provident Fund, right? And you receive the repayment. Then what will happen? So there are different situations. Has the employee rendered continuous service of at least 5 years with employer? If you are maintaining a RPF and you redeem that amount from that RPF, so it says if after 5 years you are taking this amount, then exemption will be there. If it's after 5 years you repayment received by you, that is exempted. We have read this provision, exempted. So it's talking about this, that exemption will be available if you receive the repayment after 5 years of job with that employer. And if no, then if it is due to ill health or death or etc. reason, then it's again exempted. So when it will be taxable, it's a very simple thing. If you are receiving redemption amount from your RPF before 5 years of completion of job and not due to ill health, not due to any reason beyond the control of employee, then in that case, it's also be exempted. So, no, it will be taxable. If the reason is not these reasons, except with this 3 reasons, that is going to be taxable. Again, it says if the entire balance, you are not getting the redemption, but you transfer this entire balance to your new employer, then you can again claim the exemption, otherwise it will be taxable. Or if you transfer that entire balance to NPS account also, then again it's going to be exempted. So it says something like this, not much relevant, but again, if you are maintaining a RPF with the employer and you receive payment after 5 years of your job, redemption, that is exempted. Done. If you are receiving payment before 5 years, then it says if it is due to ill health, etc., there are 3 points, it is exempted. If it is not due to ill health, etc., then it is taxable. 5 year, one more provision. If it is less than 5 years, but you do not redeem it, you transfer to new employer RPF account, or there is an NPS account also, then it's again exempted. Agar aisa nahi hai, not like that, then it's going to be taxable. So it's not more confusing. It's very simple. Just have been written for your knowledge. The diagram has been made. Okay, this is a theoretical provision. You can read it. This is 80 CCD. That is for new pension scheme. That will be, you will understand when we will discuss about the deduction provision. Now, a very important topic, that is profit in lieu of salary, is come into the force. Profit in lieu of salary. That is a kind of perquisites also, or there are some compensation also. So now the next compensation is retrenchment compensation. Profit in lieu of salary means that you are receiving something in against your salary. This, for example, you are working in an organization and your employer asks you to remove from your job. He's going to remove you from your job. That's called retrenchment. Retrenchment meaning remove from a job. In that case, they will pay you a compensation for that removal, of course. If they'll remove you without compensation, etc., you will go to the court. So they'll ask you that now we do not need you for this job. We need to appoint someone else or with some other reason. Now you need to leave this job forcefully, sort of. So you will ask for some compensation. And if you receive that compensation on retrenchment, then following kind of exemption you can claim. As we claim in case of pension, we claim in case of gratuity, we claim in case of leave encashment. In the same way, you will receive a compensation. That is called retrenchment compensation, and you can claim an exemption regarding that retrenchment compensation like this. Here is a provision, section 1010, we discuss about it. Let's say compensation received at a time of retrenchment will be exempt minimum of following. Amount received, fixed limit is 5 lakh. Amount as per section 25F of Industrial Dispute Act 1947, that is a formula. You need to solve it with this help of this formula. That is 15/26 into average pay of last 3 months. You have to find out the average pay of last 3 months into year of service. Here is solved example for you. Mr. X received retrenchment compensation of rupees 10 lakh after 30 years and 4 months of service. At the time of retrenchment, he was drawing basic salary of 20,000 per month. DNS allowance is 5,000. Compute is taxable. Retrenchment compensation. So here is the solution. 10 lakh rupees amount received. 5 lakh is this. Formula is 15/26 into 25,000 into 30. The figure will be 432,962. So this lower value will be exempted. Note says that whole amount of this retrenchment compensation is exempted if it is provided by the central government for giving special protection to workmen under certain circumstances. So that was retrenchment compensation when you being asked to leave the job. When employer wants to leave you the job, and in that case, if you are getting this compensation, that will be called retrenchment compensation. But now there is a different situation when you voluntarily wants to leave the job. Now you say, I don't want to job over here, so I want to leave this job. It is not like this that whenever you want, you will get the compensation. So employer technically remove employees before their retirement in two ways. First was retrenchment compensation, when employer decided the employee that you need to leave this job and we are going to pay you this much of compensation. But voluntary retirement has a different concept. Now employers say that out of these 100 employees we have, we want 10 should leave this job now. And it is voluntarily. Those want to leave can leave job. So there is no particular selection of employee. Employer send this request and it is on upon you. Those want to exercise this option can leave the job and getting the compensation that is called voluntarily retirement receipt. So there's a difference between retrenchment compensation and voluntarily, and that is voluntary retirement and retrenchment is a difference. In case of retrenchment, that's a forceful retrenchment of certain employee. Under voluntarily, I just need to say to my whole employee that I have 100 employee and I do not need 10 out of them. So if any out of 100, any 10 out of you wants to leave the job, they can come to me. I will give you compensation and you can leave the job. So there's a difference of choice. In retrenchment, employee do not have choice. In retirement, voluntary retirement, employees have choice. Then you might be thinking why employee will leave the job? Because of the compensation. It's a very attractive compensation. So if you are attractive enough, you can go and ask for the VRS scheme. If you do not want to leave, you can stay there. So lump sum payment or otherwise received by an employee at the time of voluntary retirement would be taxable as profit in lieu of salary. However, it would be exempt under section 1010C subject to the following condition. Receipt by an employee of public sector company, private sector company, etc. It will be exempted if as per the guidelines of government. In case of others. Okay, there should be others. No, sorry. It will always be, exemption will be find out like this. There is no exemption for government employee, etc. because you are leaving the job voluntarily. So provisions are similar for everyone and it is actual amount received. The limit is now 5 lakh rupees, same in case of retrenchment. And the third point is 3 into monthly salary. Monthly salary as per gratuity, C case. You can see what amount we need to take, basic salary, DA terms plus percentage commission of sale of last month. We do not need to take 10 months average salary. No, we just need to take a single month salary in this case. In gratuity C case, we take basic salary, DA term and percentage commission of last 10 months average. But in this case, components are same, but we do not need to take off 10 months. We just need to take the last month salary, 3 component, that is basic, DA term and percentage commission multiplied by completed year of service. This formula you need to learn. And last one is salary last drawn, same as above, multiplied by balance month of service left. For example, my age 55 years, retirement age is 60 years, and organization offers a VRS scheme. Then how much compensation I will be getting? Almost my balance 5-year salary. So note number 4 is saying balance salary. So my 5 years has been left. So the amount we are getting in point number 4 is technically whole 5-year salary amount. If my age is 52 years, then I will get 8-year salary. But point number 4, if you read it carefully, it is technically saying about the amount of salary left till your retirement. That is salary last drawn multiplied by balance months of service left. So for claiming these kind of above exemption, there are certain guidelines prescribed by the government. You need to follow that guidelines to get that exemption. Employee should complete 10 years of age of services, 10 years of services or 40 years of age. You need to read it, of course, and if there is any confusion, you can ask me in your next class or in our query session. Fine. So now the most important topic of salary, and that is called perquisites, are here. There are a lot of perquisites are here, but we are going to discuss one by one. In the first session, I have told you that salary total, to solve a numerical of a salary, you need to find out 4 main components. One is basic salary, advanced salary, area of salary, then allowances taxable portion, then compensation, we just completed that, and the last is perquisite. So if we are going to discuss, after discussing these perquisites, we are able to solve the salary numerical. And if we are able to solve the all 4 components, that means we can solve the salary numerical easily. A lot of perquisites are here. In last session, I have already discussed with you the difference between the perquisites and the allowances. Allowances are monetary for your expenditure. Like if employer wants you to bear your rental expenditure, he will provide you a house rent allowance. If he wants to bear your lunch expenditure, he can provide you lunch allowance. But if he wants to provide you the facility, then he will provide you a house and he will say, go and live that house. You not need to pay any rent. I will bear the rent. So that will now not be an allowance. That will be a perquisite. If employers say your lunch is upon me, so I will make sure that you will get your lunch. So he actually start a canteen. You can go into that canteen and have your lunch. You need not to pay anything. So that's now a perquisite, not allowance, because you're not getting any monetary payment. Or if he's providing you tiffin facility, that a tiffin will be there for you, you can have it and you need not to pay for that tiffin services. So again, that's a kind of a perquisite. So in perquisite section, we were discussing about the facilities, benefit, amenities, which is provided by employer to his employees. There are some perquisite, those are exempted from tax. There are some perquisite, those are taxable, fully taxable. Those are some perquisites, those are partly taxable, partly exempted, etc. It's a very interesting topic, and let me tell you, it's very, very, very important. From my point of view, if there's a question of 10 marks under salary is coming in examination, then I guess 4 or 5 marks provision will be related to perquisite. Balance 5 will be basic salary, allowances, and compensation. It's just my opinion, right? So there are student loan, gym membership, care gate, financial wellness program, mental health, etc., home services, retirement benefit, etc. So these kind of perquisite you can have from your employer. The term perquisite indicates some extra benefits. So let's do one thing. We will discuss this perquisite section after break. Before that break, let me see if there is any query. I will answer it. Then we will go on to a break, and when we will resume, then we will take this perquisite section. Okay. Rajesh, story gives me goosebumps. Yeah, that's a true story, and that's a reality, Mr. Raj. That is actually the reality of life. Whatever thing you have interest in, those are all simple. You can run a mobile like anything because you have interest in mobile. But you do not have any interest in satsang, then you cannot be there for even for 10 minutes. It will be really difficult. Okay. Einstein. Okay. Mr. Sankaran is saying, sir, I am age 62 year retired. This is giving me goosebumps. Okay. I want to fulfill my ambition to become CA. Yes, definitely you can do it. And I think you should do it. You are kind of a person who can set examples for everyone. There's a story of KFC. Maybe a lot of students must be aware of it. The KFC owner started that business, I guess, at the age of 67 or 68 or 70 years. And it actually make a brand, huge brand. And I guess all later than that, after 70 years of, he started this business only. And he just made this brand internationally so popular. So there is no age for anything. You can, if you have interest in that or passion, if you want to add these CA word in your life, you can start it at any point of time. So all the best, Mr. Sankaran. It's very good to see that, yes, you still have that passions for your ambitions, for your dreams. Very nice. Okay, Mr. Dhyanish asking, what is NPS account? NPS is a new pension scheme account. It's a kind of a contribution like a provident fund. It's a small contribution paid by employee. So if there is some NPS contribution, like we are discussed just RPF, PPF, etc. In the end, we will discuss one thing again. If any other payment except these payments you are getting, that will also be treated as perquisite or profit in lieu of salary. So if NPS amount is received by employee from his employer, that is going to be his, again, profit in lieu of salary. And it has a deduction also under section 80 CCD. As I can show you, when you will read this provision, what we just discussed, this provision. You need to read this provision. Because if I am asking you to read something, that means you need to read it after class. Fine. It says National Pension Scheme is a scheme approved by the government. It's a new pension scheme named as National Pension Scheme by the government for Indian citizen aged between 18 to 70 years, subscribe to the NPS account, contribute some amount in their account. It's a kind of a provident fund contribution. Employer contribution to NPS account would form part of salary of employee under section 17(1). That means employer contribution under NPS will be a profit in lieu of salary again. Okay, so everything has been written in notes. So if I'm skipping something and asking you to read it, that means when you will read it, you will get the answer of each and every question. Retrenchment means to remove someone from job. Retrenchment का मतलब है कविता that हम किसी को नौकरी से जबरदस्ती निकालते हैं कि ये लो पैसे और नौकरी छोड़ के जाओ. जैसे हमारे यहाँ कोई सर्वेंट है, हमें काम अच्छा नहीं लगा, तो हमने उसे पैसे दिए और कहा ठीक है आपका हिसाब हो गया, ये एक्स्ट्रा पकड़ो और जाओ. बट वी आर टॉकिंग अबाउट द बिग कंपनीज, द कॉर्पोरेट हाउस. In that case, it's not that easy. There's a certain amount of compensation you need to pay to a employee if he's at no fault. If somebody is doing fraud, etc., that's a different matter. Okay, Vishal is asking, there is change in May 23 examination syllabus reference to November 22 examination. Yes, there is a different assessment year for it. For November, I guess it's 22-23 assessment year, and for May, it's 23 and 24. Okay. Nagaraj starting at 34 years old. Very nice. High five from Wi-Fi, Mr. Nagaraj. All the best. You all are the inspiration for these students. And they can understand the importance of this course, that somebody wants to do CA course in 62 years. Somebody wants to start at 34 years. And you all might be 20 to 21 or 22 years. So you are at your dream journey of your life at the correct time, of course. Explain calculation exemption of, of course, we will do the examples of voluntary retirement also and retrenchment also after, we'll resume after the break. What is bonds? Bonds are kind of a debenture. Why you are asking this to me, of course. Okay, Ms. Priyanka, query don't dare to arise when you teach. Oh my God, these are so nice of you, Priyanka. Really felt so glad to hear this. If employee won't transfer URPF to RPF, Jyoti is asking, if employee want to transfer URPF to RPF, he can do so. It is called transferred balance. So if you have balance in your unrecognized provident fund and you transfer it to recognized provident fund, then that's called a RPF. And then after that, RPF provision will be applicable on that fund. Fine. Who can open SPF? Go to the bank and ask, of course. Any major person can open an account in SPF. Luke is asking, calculation of exemption. VRS calculation we will do, of course. So we are late for our break. So we are going for a break for 10 minutes. And when I will resume, we will do, of course, this numerical provisions of VRS, retrenchment, etc., leave encashment also. So just wait. We will be back after 10 minutes. Okay, welcome back, everyone. So I hope you all must have your tea, coffee, etc. As I always say. So that's a refreshing break, and break is really required. So just make a plan for your study. Always plan your study like this: that if before examination, like 2 3 months before, you are able to complete your courses. And for your daily routine, you should understand one thing, that study is very important, but you have to understand one thing more, that life is also need to be enjoy. You should not take the burden of your study upon yourself. So if there is 7 days in a week, you should study hard for 6 days, and just one day keep it with for yourself, for your activities, for your roaming, to enjoy this life. That is also important, because C is a very long course. At least it takes 3 4 years, so it's really not that easy that you can continue studying for next 3 years like this. So there should be some breaks also, like we have right now. Okay, let's see if there are any queries so I can solve it. Okay. So now I am going to solve numerical as we did in our last class. And numerical is from your study material only. So moving on to our numerical part, and that will be for leave encashment topic. I'll solve the numerical for leave encashment, might be voluntary retirement scheme and provident fund also, etc., etc. So there was numerical RPF. Just give me a second. Okay, illustration number 5, and that's page number 4.32. We have discussed. This is 4.25, gratuity provision. Okay, last we discussed the gratuity provision. Now this is the leave encashment. This is the provision. Mr. Gupta retired on 1st December 2022 after 20 years of service and received leave salary of 5 lakh. Other details of his salary income are as follows. This is the question of leave encashment, right? Basic salary, it says 5,000 per month, and it's increased 1,000 with effect from 1st April 2022. So it is 5,000 per month on 1st December 2022. But it has increased 1,000 from 1st April 2022. That means before 1st April 2022, it was 4,000 per month. Simple mathematics. There's nothing to do with income tax. This is simple maths. Again, dearness allowance, it says 3,000 per month, 60% of which is for retirement benefit. That means DA term. Commission 500 rupees per month. It is not a percentage based commission. So this is the information we have given. Again, it says bonus 1,000 per month. Leave availed during service. Leave availed is 480 days. Understand? Leave availed is 480 days, which we have utilized. He was entitled to 30 days leave every year. You are required to compute his taxable leave salary, assuming government or non-government. So if he is a government employee, you need not to do anything. It is 100% exempt from tax. Done. So we will solve it if he is not a government employee. So for the purpose of leave encashment, we need to find 4 amount. First is amount received, which is we received how much? That was 5 lakh rupees. Okay. Then the second is the fixed limit that we know all is 3 lakh rupees. Then 10 into AMS. And then the most important is leave earn minus leave avail into AMS upon 30. So first we need to find the AMS. AMS is last 10 months average monthly salary. So he is retired on the date of 1st December. So now we need to take the salary from November Last 10 months is November, October, September, August, July, June, May, April, March, how many? 3, 4, 5, 6, 7, and 9. And that is February. And we need to take three things. That is basic salary. And because DA as per term is given, and DA was 3,000 and 60% of his as per terms of employment. So that means 1,800 rupees is DA. Basic salary was 5,000. And it was 5,000 till April because it says 1,000 has been increased. So for 8 months, it was 5,000 into 8. And before that, it was 4,000 into 2. So this much amount, that means 40,000, 8,000. Basic salary is 48,000. Plus dearness allowance for 10 months, 1,800 rupees per month. So that means 18,000 for 10 months. Divided by 10. So if this value we are going to divide by 10, then that will be our $6,600 will be our average monthly salary. We will not take commission because it's not percentage based commission. And for the purpose of leave encashment, we need to take monthly salary as per gratuity C case. Okay. We cannot include bonus also because we can only include basic salary, DA term, and percentage commission. So this value will be 6,600 multiplied by this 66,000. Correct. And now leave on minus leave away. So in the question it has been given that he was entitled to a leave of 30 days for every year. And how many he worked for 20 years of service. So in case of leave earn, I told you that always use this formula. So it will never be wrong. That is leave earn is actual or 30 days in a year, whichever is lower. The good thing is in this example, actual is 30 again and 30 days limit is of course 30. So lower is not the case. So it will be 30 year and for 20 years of job. So it will be like this. Leave on will be 30 into 20 and 480 was the leave availed already given in question. If it is not given in question, then leave unavailed will be given. Then we can find out total leave minus unavailed. So that will be leave availed into AMS upon 30. So if you solve it, that will comes to 26,400. Fine. So minimum is 26,400. That is going to be exempted. Clear? Let me tell you one thing. If there is no leave avail given in question, if leave avail not given, then there is a simple way to find out total leave minus leave unavail. Then in question, unavail will be given, of course. So you can find out the leave avail. Leave avail means the leaves you have spent. It's the same thing like I have given you 100 rupees in the morning. And at the evening, you return me 20 rupees. So how much amount you have spent? That is 80. That is technically leave avail. So it's very simple, it's very basic thing. So if in question leave avail is not given, then don't get panic. In that question, there will be leave, total leave, and you need to direct leave unavail. Leave unavail will be definitely given. So when you will subtract leave unavail out of total leave, then you will get leave avail. So you will solve, you can able to solve the question. So there is the question. What we just solved is a solution. You can see it, go through it from your study material. Next is what I am going to take is our next question for discussion is illustration 6 on page number 4.40. That is for provident fund provision. This is illustration 6. Mr. A retires from the service on December 31, 2022 after 25 years of service. Following are the particulars of his income, investment for the previous 22-23. Basic pay was something, DNS is something. Lump sum payment received from unrecognized provident fund. You know, now you should remember what is the provision for unrecognized provident fund. No contribution is taxable. No interest is taxable. Repayment is taxable. And in repayment portion, employee repayment interest amount is taxable income from other source. Employer repayment contribution amount as well as interest, both going to be taxable as salary income. So we have given the information. Out of the amount received from unrecognized provident fund, the employer's contribution 220 and interest is 50. So this 270 is going to be taxable as salary. Employee contribution 250, no treatment, but employee interest treatment 60,000 interest. That is taxable in income from others. So this is the solution. Very simple solution. I just told you, solutions are very easy. When we read the numerical provision, we think, oh, it's very difficult. How I will solve it? But now you can see, it's so simple. The moral of the story, if you remember the correct provision, then you can implement it in numericals and you can solve it like very easily. So the first and basic thing, you should have remembered the provision. Without proper revision, without proper command on the provision, you will not be able to solve even easy questions also. Fine. So this has been done. Okay. Next is there is one more numerical. You can solve it by yourself on page number 41, of course. Okay. In this numerical, there is gratuity provision, retirement provision. It's a combined provision question. You can solve it by yourself. If there is any problem, you can let me know. I'll solve it for you for next class. Next is voluntarily retirement questions. Some students were asking me, sir, please solve a voluntary retirement question. So let's solve it on page number 4.47. We will solve a voluntarily retirement numerical. Here is the question. Mr. Datta received voluntary retirement compensation of 7 lakh after 30 years, 4 months of service. He still has 6 years of service left. So how many months he has? 6 into 12, 72 months. And if we multiply it with the per month salary, so that will be the 4 point of our compensation exemption provision. At the time of voluntary retirement, he was drawing basic salary 20,000 per month. Dearness allowance form part of salary 5,000. Calculate the taxable voluntary retirement compensation. Jitna taxable hai, we need to find it out. Voluntary retirement compensation has 4 limits. First is amount received, that is 7 lakh rupees. Then the fixed value is 5 lakh rupees. Then the third, it says that is 3 months salary into complete year of service. So 3 months salary is 25,000 rupees salaries per month into 3 into 30 years. That will comes to this amount. And then the last was balance salary, a balance salary left. So total salary was this and balance month salary left is 72 months. So that will be 18 lakhs. So out of these 4 amount, that is 5 lakh is the lowest amount. So that will be exempted and balance is going to be taxable. Simple. It's very simple. You saw that the provision was finding very difficult. When we are studying, you might be thinking it's very difficult to solve this provision, but technically you can see now it's not that difficult. It's very, very, very simple. I am here for you. If you have any problem, any issue, any confusion, you can ask me in next class. I'll solve it for you again. Okay. So moving on to our perquisite section now. We have done the numerical of each topic, what we are studying one by one. But now the perquisite provisions is going to start. And as I've told you, this is the most important topics of salary chapter. One by one, we will discuss it about it. There are some are very complicated also, slightly confusing also. But together we will do it. Together we can do it. So just never lose confidence. You should feel that, yes, I can do this. What is difficult in this world? Nothing is difficult. If someone can make rocket, someone can go to space, I can just need to do some books also. And I will do it. Just focus your brain. Focus is very important. You have to be focused. Focus means whatever you are doing, you have to be focused on that work at that time. Like if you are in a party, you are doing party, then don't think about the study. Because there will be no use. You will spoil your party mood also and study that you can't do. So if you are attending a marriage of your relative, etc., then you should focus in that marriage, involved in that marriage completely. Just forget about every study thing, etc. And the vice versa also. If you are studying, then forget about everything. First of all, switch off your Wi-Fi and mobile data and keep your phone aside. Decide I will study for only 30 minutes, just only for 30 minutes. If you have a problem that you can't study for a long time, for 2 hours continuously, just make it sure that you are studying for 30 minutes. And for that 30 minutes, you should keep your mobile and these kind of devices separated. After 30 minutes, take a break for 5 minutes, do your WhatsApp, etc. Then again come back for 30 minutes. And then gradually increase this one by one. You need to increase this scenario, this theory. That will really help. And when you are studying, I'm just giving an advice, just be focused. Keeping a book in your hand for a whole day is nothing to do it. If you have no interest in it, if you're not focused and thinking about something else. So please just make a habit that when you are doing something, just involved with it completely. And the most important thing in your life this time is that you should give your more time to your study. Other things are secondary, third, fourth, fifth, 7, 8, 9, 10, but the primary thing is your career. This need to be done. Okay. So as an example of perquisites, Mr. A, an employee, is given a house by his employer on 31st March 2023. He is terminated from services, but he continues to occupy the house. Now understand, anything will be taxable under that salary only when employer-employee relationship continue. So after when the relationship ends, if you are receiving anything, that will not form part of income under the hat salary. So it's a very good example to make you understand that. Fine. But he continued to occupy. So Mr. A was working with his employer till 31st March 23. He got terminated. But the house he was using during the employment is still in his occupation. But now that house will not be treated as perquisite under the hat salary. Now it will be the part of income from other sources. So he's terminated from services, but he continued to occupy the house without the permission of the employer for 6 more months. After which, he is evicted by the employer. The question arises whether the value of the benefit enjoyed by him during a 6 month period can be considered as a perquisite and can be charged to salary. It cannot be done since the relationship of employer-employee ceased to exist after 31st March 23. However, the definition of income is wide enough to bring the value of the benefit enjoyed by Mr. A to tax as income from other sources. Definition of perquisite. Again, the term perquisite means defined under section 17(2). The definition of perk is an inclusive one. Based on the definition, perquisite can be classified into the following 3 ways. Perquisite taxable in the case of all employees. There are some perquisite, those are taxable for all kinds of employees. So what kind of employee we have? We have 2 kinds of employee from the point of view of perquisite section. One is a specified employee and other is non-specified employee. So what are specified employee? What are non-specified employee? We will discuss. But for time being, some perquisites are those perquisite, those are taxable for all employees. Then tax-free perquisite in case of all employees, those perquisite, those are tax-free for all employees. And the third is perquisite taxable only in the hands of specified employees. So you might be need to question me, sir, what is the meaning of specified employees? So do not worry. Have patience. Enjoy the journey. Time will come. I'll tell you the meaning of a specified employee later in this section. Just relax. First of all, we are seeing actually those perquisite, those are taxable for all. There are some perquisite, what we are going to discuss in this table, and there are some, those who have special valuation rules. Those valuation rules will come later in this topic. First is rent-free house. This is the most important perquisite. And I personally believe if there is a salary question, then this perquisites need to be in that question. If there are 10 salary question, then out of that 10, 9 must having rent-free house provision. So how we find out the rent-free house provision? It has been written refer valuation rules. So we will discuss valuation rules later in this chapter. Again, concession on rent. This is also a rent-free house part. Again, refer valuation rules. We will discuss it over here. Now, obligation of employee met by employer. There's a word that's called obligation of employee met by employer. What is the grammar meaning of word obligation? Obligation means your liability, legal liability technically. So if there is a legal liability to pay some perquisite, to pay something on the employee, and employer is paying it, then it is a perquisite which is going to be taxable for all kinds of employee, whether you are a specified employee or non-specified employee. For example, there is an employee who appoints a servant in his house for his daily work, for his personal work. But the salary of that servant is paid by employer. So who was legal liable to pay the salary of that servant? Of course, the employee, because he is the one who appointed it. So in that case, that is the kind of obligation which needs to be paid by the employee. But if the employer is going to pay, then it will be treated as obligation of employee met by employer, and that is going to be taxable for all. Understood? For example, amount paid by employer in respect of any obligation. So understanding the meaning of an obligation, that means legal liability, which otherwise would have been payable by the employee. So if there is some liability, legal liability, which needs to be paid by the employee, but the employer is paying it, then it's going to be taxable for all employees. Examples is over here, of course. If a domestic servant is engaged by an employee and the employer reimburses the salary paid to the servant, it becomes an obligation which the employee would have discharged even if the employer did not reimburse the same. This perk will be covered by section so and so and taxable in the hands of all employees. So all these kind of perquisites, those are not mentioned in tax-free or specified employee category. And if these perquisite is in the nature of obligation of employee met by employer, that need to be taxable for all employees. Amount payable by the employer directly, indirectly to effect an insurance of the life of the assessee. Of course, if there is any life insurance premium paid by employer on the life of employee, it's going to be taxable for all employees. You can read it. It's a paragraph has been written, but there is no such requirement to read these huge kind of paragraph. You can read it generally. It's going to be taxable for all employees. All these perk 1, 2, 3, 4, those do not have valuation rules, separate valuation rules. Just need to be understand one thing, that the amount paid by employer is going to be taxable in the hands of employee as a perquisite. Okay. That is specified security or sweat equity share. It is a separate valuation rule. So if employer is providing you sweat equity shares or allotment or transferred by the employer to the employee, then in this case, it will be a taxable perquisite in the hands of all employee. How we will find out the valuation in this case, what is the meaning of sweat equity share, etc., that we will discuss in the valuation rule. Valuation rules are given in the last of this chapter. Next is amount or the aggregate of amount of any contribution, that is the provident fund provision, what we have already discussed. This is automatically written over here. Is a new thing is this. Amount or the aggregate amount of any contribution made to the account of the assessee by employer. Now we are talking about the employer. If employer is making contribution to RPF, NPS or approved superannuation fund. If employer is making contribution in these three funds, then annual accretion, that means interest, we are talking about the interest portion, then the annual accretion to the balance at the credit of the RPF, NPS or approved superannuation fund. We have studied that if employee contribute more than 2,50,000, then the interest which accrue on exceeding 2,50,000 amount, that is going to be taxable. Now the same thing is coming, but this is on employer contribution. And the limit of 250 has been changed over here. The limit is now 7,50,000. This is for employer contribution. That was for employee contribution. So if employee contribute more than 250, and if employer do not contribute, then more than 5 lakh. So any interest accrue on exceeding that 5 lakh amount, that will be interest as a taxable. In the same way over here, if employer contribute more than 7,50,000, then the interest or annual accretion on that exceeding limit more than 7,50,000 is going to be taxable as interest in the hands of employee. We have a separate numerical solution for this question. This provision and that employee contribution provision are slightly technical. So we will discuss it in detail when we will discuss it with the help of a numerical. That will be really easy for me to make you understand what exactly these provisions want to say. Any other, it says again, why? That's it. Any perquisite other than above, those do not have valuation rules, is going to be taxable, either with some separate valuation rules or full amount is going to be taxable. We have separate valuation rules for rent-free house, for concessional rent house. Then we have separate rules for specified security or sweat equity shares, of course. Then we will separate valuation rules for numerical. I will solve it for you for this point number 6, that is for amount or the aggregate amount of contribution. And then this is point number 7. First of all, we need to discuss point number. This is 6 and this is 7. Others valuation rules also been specified for some other perquisite also. These are interest-free or concessional loan, traveling, touring, accommodations, free or concessional food, gift voucher, credit card, club expenditure, use of movable asset, transfer of movable asset, other benefit or amenity. So we have valuation rules for these perquisite. Technically, we can say that from point number 1 to 7, only point number 4 and 3 does not have any valuation rule. Otherwise, point number 1, 2, 5, 6, and 7 have valuation rules. What we will discuss one by one. This is the example for that point number 6, that provident fund provision. With the example is missing over here, so I will discuss it when I'll give you an example, then we will discuss it about it. So I am skipping this provisions of provident fund because we need a solved example to understand the formula and the value under this provision. Next is tax-free perquisite in all cases. So before that, tax-free perk in all cases, we in part A we discuss about the taxable perquisite for all, in which rent-free house we will discuss later with valuation rules, concessional house we will discuss later with the valuation rules, then sweat equity share we will discuss with the rules, then provident provision we will discuss with the example, then the other provisions we will discuss with the separate valuation rules. So those I just left is going to be there after some topic of B, tax-free perquisite, and then one by one we will discuss all the valuation rules. So I've just make sure that first of all we will discuss the all other provision, then we will move on to valuation rules, because there is a reason that is slightly complicated, or we can say difficult. So I just wanted to cover all of the topic, then we will focus our whole brain, our whole energy to understand those difficult topics. I guess this is my way of understanding things, that first of all we need to attempt those things, those are easy. And then at the end, we will focus our whole energy on that topic, which is technically difficult or most complicated. Fine. And do not worry, I'll make sure that you will get all those provisions in easy way, because for those provisions, I have made proper diagram, chart presentation. And then you will feel that these provisions are so complicated if we read it theoretically. But with the help of chart and diagram, you will find it that yes, these are very easy. That's the way I studied at my point of time when I was doing CA. I always made diagram and charts to understand those provisions in easy way. And that's what I applicable or apply for you also. Now, tax-free perquisite in all cases, the following perquisites are exempted from tax in the hands of employees. These are very good. If these are coming in examination, that means God is listening. God is kind for you, but I believe that is not going to be happen, because these are exempted. So might be 1 or 2 will become only. Examiners just need to check that you know the provisions of exempted perquisite also or not. But of course, there is no numerical treatment of these perquisite. These are very, very simple. First is telephone facility. Now remember, if in examination there is telephone allowances coming, so do not get confused. If there is telephone allowance, 500 rupees per month is coming. What we will do? Any allowance which has not been discussed with you, the exemption of which has not been discussed with you, if it comes in examination, you need to taxable it full. So we did not discuss the telephone allowance provision anywhere. So that means going to be full taxable. But this is telephone facility. Telephone facility is 100% exempt, but telephone allowance is 100% taxable. So if in question is given telephone facility, or employee is paying your telephone bills. If employer is paying your telephone bills, that means it's a perquisite. Allowances are a very nice character that generally always allowance will be written in the question. Telephone allowance will be given. So that means it's an allowance. So if it's given in question that you have a bill of 1,000 rupees per month and employer is paying your bill. So that means it's a facility because your bill has been reimbursement by the employer. So all reimbursement are perquisite. All reimbursement. Allowances means a certain amount of money will be given to you and you want to expend it on it or not. That's your choice. So allowances will be with the name of allowances. Otherwise, it will be always a perquisite. So telephone provided by an employer to an employee at his residence, that is a 100% exempt. Transport facility, if employer sending his cab at your house and picking you up and for office and etc., that is again exempted. Privilege passed in privilege tickets. Privilege pass and privilege ticket order granted by Indian Railway to employees is exempted. Perquisite allowed outside India by the government. If government is providing you perquisite outside India to his employee who is citizen of India, then all allowances and all perquisites are exempted. You might have read these provision in income which do not liable to tax. That means chapter number 3, income exempted. This provision is from that. Employer's contribution to staff group insurance scheme. Employer contribution to staff group medical insurance scheme or group insurance scheme. Again, it's exempted, not going to be taxable. Annual premium by employer on personal accident policy. If employer is paying accidental policy premium, that is again not going to be taxable. Refreshment provided to all employees during working hour in office premises. If you are getting refreshment like chai, tea, coffee, juice, patties, pastries, chocolate truffle pastries, strawberry pastries, butterscotch pastries, burger, cheeseburgers, taste. Can you feel the taste? Chole kulche, sort of like refreshment. If you are having refreshment in office hour in business premises, that is going to be exempted. If there's a coffee machine in your house, in your office, of course, and you are actually having 10 coffee or 20 coffee or 50 coffee in a day, that is not going to be taxable. So you can have as much as coffee as you want. You can have as much as tea you want. If there's refreshment, samosas, etc., you can have a lot of amount. If you want, then 100% is exempted. There's no taxability on refreshment. But lunch is going to be taxable. There is a certain provision. Subsidized lunch provided to an employee during working hour at office premises, provided the value of meal is up to 50 rupees per meal. So if there's a canteen and you are getting refreshment from them, that's not going to be taxable. But if the employer providing you the lunch facility, and if you consume a lunch of 120 rupees, the full 120 is going to be paid by the employer. You are not need to pay anything. So fund 120 is to be paid by the employer on your behalf because you consume the lunch of 120 rupees. But up to 50 rupees per meal is exempted. So he is paying 120 rupees, but taxability will be in your end for rupees 70 only. If you are going to have a dosa, masala dosa in the canteen, and for say the cost or the price for the masala dosa in the canteen is 90 rupees. So 50 rupees will be exempted and 40 rupees going to be taxable for that. Clear? So for lunch, 50 rupees exemption per meal. For refreshment, 100% exemption. Recreational facilities, including club facility, extended to employees in general, not restricted to a few select employees. If it is available to all employees, any recreational facilities in the office premises, that is going to be exempted. Amount is spent on training of employee, that is also again going to be fully exempted, not going to be taxable at all. Sum payable by employer to a RPF or an approved superannuation fund. Sum payable by an employer to a RPF or an approved superannuation fund or deposit is going to be exempted, but the interest accrue on it, if it is exceeding 7,50,000, that is going to be taxable. So that contribution is not taxable, but the interest part is taxable. Leave travel concession is a different topic. It has some valuation rules we are going to discuss as it has been written, discussed below. After this table, the first thing what we will discuss is leave travel concession. It is also important for your examination. Medical facilities has some limits. Generally, medical facilities are exempted perquisite, but there are some limit. We are going to discuss it again. Rent-free official residence. We all know rent-free official residence is rent-free house, but rent-free official residence provided to a judge of a high or supreme court. That is 100% exempt. For others, there is a provision of rent-free house, what we will discuss. conveyance facility, etc., provided to high court judges, etc., is going to be exempted again. For other conveyance facilities, there is a separate valuation rules also. So this is a limit of 15 points. Of course, most of them are exempted. Just need to remember the name. But leave travel concession, then that lunch provision, and then medical, etc., have separate rules. One by one, it will be in our questions. Now, point number 12, as I have told you that we will discuss this provision, leave travel concession, after the table firstly. So this is point number 12 from above table, that is leave travel concession in India under section 10.5. So what is leave travel concession? Understand it. First of all, let me take the queries. If somebody is asking, then we will discuss this point, that is leave travel concession. We are actually on the targeted. Actually, there's 40 pages of notes and we are on target. We have almost covered 24 pages. So we are left with 16 pages of notes. But these pages have super important provision. The lot of charts, etc. there. First of all, let me see if there is any query. वॉलंटरली का पॉइंट नंबर 3 कैसे करना है, कविता इज आस्किंग. वॉलंटरली का जो पॉइंट नंबर 3 है कविता, दैट इज 10 into AMS. सो मैंने आपको बता दिया AMS कैसे निकालते हैं. AMS निकालनी है वैसे ग्रेचुटी सी केस में निकालते हैं, उसका मल्टीप्लाई 10 से कर दीजिए तो वो थर्ड पॉइंट आपका निकल आएगा. क्लियर. कविता अगेन आस्किंग, वॉलंटरली के पॉइंट नंबर 4 में जितनी आपकी जॉब बची है उतने के ही महीने आपको लेने. ठीक है. Illustration 10 not understand, please make me understand. आप एक काम कर सकते हैं. कौन है? मिस्टर मिस दोशी. You can scroll back the video and you can see again. So you will be able to understand this. Let me see what was illustration number 10 was regarding, I guess, VRS. We did not discuss illustration number 10 yet. I just told you that is regarding the provident fund provision. That's slightly complicated. I will teach you because there is some error in the study solution also. So I'll make sure this error will be, first of all, need to be corrected by me. Then I will present that example with you and we will discuss it. So have patience. I will solve it for you. Illustration number 10. It's a very beautiful illustration. Might be not going to come in examination because it's so complicated, but still we will cover it also in our lecture. Just wait. What is sweat equity share? I told you we will discuss it with the valuation rules. For time being, I can tell you a company allots some equity share free of cost generally to those directors, officer or workers of the company who actually work for the company from the inception of the company. The word is sweat equity share. Sweat means, you know what the sweat means, like sweating. So those have worked for company and actually work like they are use their sweat in the company, that hard work, toiled labor. So for their services, company at times allot them some shares free of cost. That's called sweat equity shares. Right? We will discuss it later. Meaning of superannuation fund, kindly do not ask this kind of question. You can Google it, what is superannuation fund, what is RPF, etc. That will save our time. Please ask me the provision regarding. If you can, you will ask me, sir, what is conveyance facilities? So I am trying to, as much as possible, I can communicate with you, but these kind of question, general thing, you can Google it also. Fine. Okay, next is Amit Naria is saying, sir, can you share this PDF with us if possible? Which PDF you are talking, Amit? The numerical one? The numerical one is the institute study. You can download it from the portal. Anyone can download it from the portal. You can write in the Google also, study material for intermediate assessment year 23-24 ICI. There will be a link. You can download the salary chapter. So you will have that PDF. Okay. And what PDF I am using for my notes, it's already on the BOS portal. You can download it from the Board of Study portal. Okay, so Miss Bharanti Doshi is feeling hungry after the example of pastry, burger, pizza. Very good, very nice. Yes. Mohammed with Bohra is asking, sir, allowances and perquisites are same or not. We actually discussed this in the last session also and this session also. That's why I always say, now be disciplined. Join the class at the correct time, 7 a.m. sharp. So you will get the full knowledge. We have discussed this twice, that what is the difference between a perquisite and allowances. And that's why I ask now, please do not ask this kind of question, because it will consume our time. It's not only my time. It's the time of everyone who is watching. So if you want to know the difference, please see the classes, which is on YouTube, the session 1 and session 2 also. You will get your answer. Okay. I request, please do not ask this kind of question. Okay. Next is Priyanka Pandey. So how can we differentiate the word threshold limit and exemption limit? Is it right to say that exemption limit of 10,000 on taxable limit is prescribed and the incurred amount is 50? Look, threshold limit and exemption limits have different meaning. Threshold means some kind of limit. It can be exempted, it can be taxable, it can be something else also. Exempted limit is a exemption limit, which actually say this much amount is exempted. Threshold can be 10,000 per month, but it might be exempted or it might not be exempted. So these two words have separate meaning. You have to use it with the provision or with the context you are actually going to use it. Sir, please hurry, because article should start at 10:30. Do not worry, I am going to end it very soon. Okay, so now leave travel concession. Now, what is leave travel concession? We studied the leave encashment today. And these leave travel concession and leave encashments are two separate, completely different things. Do not correlate with leave encashment, because leave travel concession is what? Let me explain you. It's a kind of a perquisite. Your employer allowed you and your family to travel. It depends upon the policy. It depends upon the organization. Some organization provides it. Some organization does not provide it. So if it is provided in the question, then we need to solve it. So it says that if your employer provide you leave travel concession, read the name carefully. Leave travel concession. 3 words. Leave travel concession. So employer provide you some leave. You have a 10 days leave. Go and travel somewhere. And I will reimburse the traveling cost only. Understand? He is going to just bear the travel cost, not the accommodation, not the food, etc. He might be able to compensate for the travel amount, for the traveling concession, for the travel amount he reimbursed for you. So LTC, in short, we said LTC, received by employee for himself or for his family from his employer for proceeding to any place in India. Remember? Your employer can provide you LTC outside India also, but that is not going to be exempted. That is going to be taxable, completely taxable. So LTC or leave travel concession is going to be exempted if it is provided to any place in India. Numerical treatment, of course, salary head में हम लोग पढ़ रहे हैं, of course, उसी में पढ़ेंगे. So if you are getting leave travel concession on leave or retirement or termination, then it is going to be exempted as per rule number 2B. So 2B will tell you how much amount will be taxable or exempted in this kind of perquisite. And this is the exemption for your family and you. So what is the definition of family? You can take only your spouse. You have to take your spouse. You cannot go without taking your spouse after you being married, of course. So in family, you can have exemption for your spouse traveling expenses and children of individual, whether they are dependent upon you or not, does not matter. So you can take your spouse with yourself, the travel exemption can be availed for it, and your children, of course, the travel concession will be available. And you can also take your parents, brother and sister, but only if they are dependent upon you. So if you are taking your brother, parents or sister, those are independent, then you cannot claim exemptions for their expenses, travel expenses. So you can have exemption for your travel expenses for yourself, your spouse, and your children. Now there is an issue. If somebody has 10 children, 5 children, the huge amount of exemption will be claimed by the assessee. So to stop that, income tax made an amendment that from 1st October 98, the exemption shall be available only in respect of two children. The children who is born from 1st October 98 on or after. In that children's, you can have exemption of only two children. But in case of children born before 1/10/98, this restriction is not applicable. How it will be calculated? Let me show you. For example, before 1/10/98 or on or after 1/10/98. For example, there's an employee who has three children born before 1/10/98 and one children born on or after 1/10/98. So how much children exemption can be claimed? How many children exemption can be claimed? That is 4, because before 1/10/98 there is no limit. They all three can claim exemption, and after that maximum 2 children exemption can be claimed. If it is reverse, 1 and 3, then this will be included, and out of these 3 only we can take 2. So total exemption of 3 children can be claimed. 5 and 3. How much now? Who will answer me? If before 1/10/98 5 children born, and after 1/10/98 3 children born, then how many children's exemption can be claimed under LTC? I am waiting for your answer. Okay, somebody is asking Mohammed Baid Vora sir, 5th November को morning और evening में both lecture आपके हैं? No, IABOS app पर schedule में दिखा रहा है. That's why asking. No. My lecture is on 1st, then 3rd, then 5th, then 10th, and then 12th. Okay, and all are morning session. Fine. So answer has been coming. Correct answer, of course, 7. Well done. High five from Wi-Fi. Those are giving the correct answer. Very well done. The correct answer is 7. Who's saying 6? Just Shah, why are you saying 7? I told you they all will be eligible, and out of these 3, 2 can be taken. So the correct answer is 7. Okay, that's a simple thing. That was a note. Moving on to the notes again. So you understand how we will take the children exemption? Correct. The exemption under this section shall be available to an individual in respect of 2 journey performed in a block of 4 calendar years starting from 1986 calendar year. So for every 4 years, you can claim exemption of only maximum 2 journey. So for example, if you got a job in 2004, then for 2004, 5, 6, 7, this will be called your block year, 4 block year. And out of these 4 block years, you can claim exemption of only 2 journeys. For example, you might have conduct 3 journeys, but you can claim exemption of only any 2 of journey out of these 4 block of year. There's again very interesting thing also. Okay. You got the job in 2004. Then our block year is 4, 5, 6, and 7. So in these 4 block of year, you might be getting 4 LTC, but you can exempt only 2 out of it. This is example 1. Simple. Example 2. Somebody got job in 2009. So 9, 10, 11, 12. So he has now 4 LTC exemption can be, 4 LTC out of 4 LTC, he can claim 2 exemptions. But he only claimed 1 LTC exemption. He did not claim 2 exemption. Maximum he can claim 2 exemption out of these 4 years of LTC. But he claimed actually 1 LTC exemption. So he has with 1 extra exemption left. So now the department says, now you can do one thing. In next 4 years of block, 13, 14, 15, 16. Generally, you have 2 LTC exemption. But now you can claim 1 more LTC exemption. So totally, you can claim 3 LTC exemption two for these 4 block of year and one for that LTC exemption which was remaining in last 4 block of year. Now you might be asking, what if somebody did not claim any LTC exemption in these 4 year of exemption? In our example, he claimed one LTC exemption, so we transferred one over here. So you might be thinking, what if he claimed 0 LTC exemption? Still, you can only claim one. You can carry forward only one LTC. Even if you do not utilize any of them, still you cannot carry forward two. Only one LTC can be carried forward. So only one LTC can be carried forward in this block of year. And very important thing, you need to utilize this LTC exemption in first year of next block. Otherwise, it will be lapsed. So if you do not claim both LTC exemption in any 4 block of year, then only one can carry forward, and you have to use that one carry forward in the first year of next block. Otherwise, it will be lapsed. If you did not claim any LTC exemption in 2013, then only 2 LTC exemption again you can claim with remaining 3 years left. Okay. Look, I really want to cover each and every point. So I am trying to cover each and every smallest point of your study material. So you have to be with me. You have to understand that it's a huge syllabus. So just do one thing, whatever I am teaching you, just revise it. Please, we all are doing a hard work for you. Me, your institute, board of studies, other faculties, your जो team है वो सब लोग बहुत मेहनत कर रहे हैं. They are actually doing a lot of hard work just for you. So still, please, just request, please do as the faculty say or as we say to you, because we know that if you do this kind of hard work, what we are doing over here, you will be succeeding in your studies. So that was note number 3, that the 2 journey can be claim exemption out of 4 block of year, and where such LTC is not availed by an individual during any block of 4 years, then exemption can be claimed in the first calendar year of the next block only for in respect of one journey. Clear? Now moving on to our rule number 2B. Now we can do one thing. Let me see the queries, and because rule number 2B will take certain amount and it's already, I guess, 9:40. Some of you might going to join the articleship also. So let's see if there is any query. I'll solve it. Okay, Mohammad Aslam is saying I'll start hard work from today. Yes, better late than never. You can start working from now, and I believe till May you will be able to complete all the subjects very easily, and you will be able to clear the group also. So please believe in yourself. You have that kind of brain. As scientist says, you know what science says? Science says we have that capacity of brain that we can learn each word of each book which exists in this world. This is true. Our brain has that capacity that we can learn each book which is presented right now in this world with each word in it. That is the capacity of our brain. What we are utilizing is 2 to 10%, of course. But again, you don't need to learn those books. You do have to learn 4 books only. So that brain that we all have, that we can learn easily 4 books. It's just about that we are not starting. We are scared. We are thinking that we'll start it from tomorrow. There is no tomorrow. It's only today. There is no tomorrow. It's today or no day. So it's today you need to start from today. And believe me, it can be done. CA is not that difficult. It's difficult when you are not properly planned. If you work without planning, everything is difficult. Very difficult. So make a plan. There is a plan. You need to study hard. You need to cover your subject. Do not fear. And do not take advice from anyone. If somebody says CA is very difficult, I won't be able to do it, then do not think that he was smarter than me. He is smarter than me. He was not able to do it. Then why I am able to do it? How I will be able to do it? Do not take these kind of advices from anyone. Be positive. Just remove negative people from your life. Those are not doing anything. Those are wasting your life. You are doing CA. You need to be with the company of your kind of people. That will really going to motivate you. I am going to motivate you. I am here. I am saying I was a very, very normal student of my life. I'm telling you, very average. You won't believe. I got so many punishments in my school life till 10th. From nursery till 10th, I have got so many punishment. That is like beaten by every teacher of the school at my home. Everyone due to study. I was not studying. I was into games, etc., like sports. So because I was not studying, I was a very, very average, or you can say below average student till 10th. Till 10th. So I'm a living example in front of you. After 10th, I started studying. How it happened? Something actually changed my life. As I'm trying to motivate you, somebody motivate me. And that actually makes me understand that this is life and I am doing this for my future. And I have to do something good with my future. And that day, I realized that we all are intelligent. Because I was using my intelligence in sports, etc. That's why I'm not studying. But the day I changed my focus, I changed my vision. And I'm moving into study. And that actually created my interest in study. And the day I created this interest in my study, let me tell you, everything was simple. The study I was afraid of, gone. Everything was gone. It was starting so easy for me. And I completed my CA in a very short duration. Very, very short duration. So I'm a living example. If you think you are a below average student, it's no problem. You can do wonders. Still, you can do wonders. Even a below average student can do wonders the day he'll realize, I need to study for myself, not for my parents, not for this world. It's just for me and my respect and for my future in this life. So something changed. I'll tell you what changed my vision for this whole journey. But I'm just telling you that if you are average, below average, and you think I can't do this course, this is no use. This is useless. Anyone can do. You need to just to be punctual, disciplined, plan your working, and hardworking. CA course just required hard workers. That's it. Those can constant study with a disciplined manner, with a planning. Those can complete this course very easily. So, this part is not in module. Which part is not in module? Of course, it is in module. Okay. Okay, somebody is asking a good question. That is, twins should as in leave travel concession. Okay. How was my CA journey? Kavita is asking. I'll tell you if we will get the time. After covering these topics of salary, I'll definitely going to tell you what was the journey. So, somebody is asking about the twins, and that's a very good question. Like this kind of queries is really interesting. So, in case of children, the rule is this, that before 11098, there is no issue. The issue arises 11098 on or after. And there is maximum 2 children you can take with yourself. Now the problem arises with twins. So, provision says, if on or after 11098, for example, here are 4 children, all 4 are going, of course. Okay? Now it says, suppose after 11098, case A, single child born, 1, and after that, twins born. Twins. Now, out of these 3, how many will go? A very interesting provision. If single child born first, he will go, of course. And if twins born after single child, then both will go. So that means in this example now, 7 children can claim the exemption of LTC provided single child born first, before that twins birth. So if single child born first, he will go. And if twins born after single child, then both will be included for the purpose of exemption. But if vice versa, for example, over here, 5, and the second example is A point. Now till twins born first, and then single child born. So if twins born first, then only they will go. He cannot accompany them. So in this example, I should take it over 4 also, so you will not get confused. So now in this example only 6 can claim exemption. So in case of twins, you should understand the provisions say like this, that if first after 11098, look, if twins is before 11098, there is no point of discussion, all are going. But if on or after scenario, single child born first, then he will go, and after twins, both will go. Both will claim the exemption. Okay. And if reverse happened, like if twins born first, then only twins go, and single child or any child born after that, even twins born after that, or single child born, exemption cannot be claimed. So, which is the beneficial thing? The first one. If single child born first and then twins, that the exemption can be claimed of higher number of children. I hope. I guess everything has been cleared. So time has reached to the level. So we discussed a lot of provision today, and remaining provision will be taken day after tomorrow class. So please, again, I want to say same thing, revise twice. That's my advice to make you wise. And whenever you are going through the notes, etc., whatever topics I skip, because those are theoretical provisions, but you should read them also. That will clear your concept, and that will really help you. Again, that will be really beneficial for you. So just stay good, stay healthy, keep a study, work hard, and we will together complete this journey. Okay. All the best. Good day. Take care.